really gold is like the thermostat for the state between America and China, which is really the only conflict. And what happens when everybody gets back, and what happens in China when the Americans go home. And then that will permeate, and that will be what pushes the gold price. If it's a nothing burger, it won't push it. If it's great news, gold will fall heavily. If it's terrible news, gold will go through the roof. So, you've got that range. And so your source in the market will be the price of gold. If you look at rare earth and you go, oh, how about chromium? How about cobalt? How about all these other weird? How about iridium? How about yttrium? China's got a stranglehold on pretty much all refinery in the world, full stop. Well, gold is full war, and we've been heading towards that. And then when the changes with the People's Liberation Army and Xi at the beginning of the year kicked off, which at the very least delayed it by at least 1 year, gold went, stop.
Silver's down more than 3% this morning after that huge run. You've called silver FOMO gold, but is that FOMO washing out? You told your viewers gold will tell us. Gold goes up, bad. Gold goes down, good. As the market digests Xi's warning over Taiwan today, I mean, what timeline are you kind of watching for gold to price in the reality of this summit, regardless of the official statements?
It's not what you hear. It's what was said. Yeah. So the information will flow. It will come out of the real meetings that we don't get to hear what is said. And if that is scary, gold will go up over the next, days and weeks. And if it was, oh, okay, this we can work with this, it will go down. And if it's like, oh yeah, yada, 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 they're not giving up anything, we're not giving up anything, it'll go sideways. So really, gold is like the thermostat for the state between America and China, which is really the only conflict that counts. And, it isn't a conflict at the base of the value pyramid, thank goodness. It's at the top, which is trade and actually intelligence. So that is where the conflict sits right now. And, I would say that they are trying to, and Trump is trying to very much, get this back on track again. And he's got a very, very difficult job there. And, the market is saying right now that, it's as yet a nothing burger. But of course, if there was important stuff said in private, that won't come out immediately. It will, slowly drift out into the public domain.
Gold is reacting less to headlines now and more to what powerful people refuse to say publicly after closed-door meetings. According to Clem Chambers, the real signal is not the summit itself, but whether gold quietly trends higher in the days afterward, despite calming media coverage. That divergence matters because institutional desks often reposition long before retail investors understand why. If gold keeps climbing while officials claim diplomacy succeeded, savers holding only paper assets could get blindsided fast. Next, Clem Chambers reveals why private diplomatic leaks often appear in gold pricing weeks before mainstream narratives catch up.
Yeah, good question. I mean, it's interesting because you could kind of go into, talking about if gold stays flatter after this meeting while stocks rally. I mean, does that mean that the summit worked, or does it mean that investors are being lulled into complacency?
I mean, the relationship between America and China is so vast. That's already in the market. Everybody knows that what this tension is, or the market does anyway, not maybe everybody. But it's known what the tension between America and China is. I mean, Trump couldn't have made it clearer, could he? And, Xi couldn't have made his stance any more clear either. So that's all priced in. It's what is the result of this get together around a table and break bread. That is what will change prices. And right now, I mean, people are probably worrying that somehow rare earth is all going to be fixed now because China will be nice for the rest of all time and give everybody as much rare earth as they want. But no, that's the market thinking. What has actually, or what will actually be tacitly agreed between the two parties, that is what will push gold around. And obviously, everybody that are in that room, what they say or how they look to the people around them, and information is like honey. It just gets everywhere unless you're very, very careful. And it will just leak everywhere what has gone on today and tomorrow, etc.
Wall Street keeps celebrating every diplomatic photo op, while ignoring how fragile the supply chain underneath modern economies has become. Clem Chambers notes that rare earth dependency is not suddenly disappearing, because two governments shared a handshake and a press conference. Markets are treating structural geopolitical conflict like a temporary tariff disagreement, which is exactly how investors get trapped near cycle peaks. If gold stays firm while equities rally, that usually signals smart money trust the headlines far less than television analysts do. Next, Clem Chambers exposes why everything is priced in is usually said right before markets violently reprice risk.
And what happens when everybody gets back, and what happens in China when the Americans go home, and all that stuff. And then that will permeate, and that will be what pushes the gold price. If it's a nothing burger, it won't push it. If it's great news, gold will fall heavily. If it's terrible news, gold will go through the roof. So, you've got that range. And so your source in the market will be the price of gold.
Yeah, it's interesting. I mean, because rare earths are not just a trade item. They touch defense, chips, EV, AI hardware. I mean, the grid. Even if the market thinks if the market thinks that this gets fixed, why should investors trust that China gives up leverage it's spent decades building?
They won't. Yeah. Exactly. So, people will go wobble, wobble today. Oh, well, it all seems to be going smoothly. Oh, maybe it'll be fixed out. Wishful thinking. And it'll go wobble, wobble, wobble a few percent. But, over the next... people are ringing me up because I'm in the zone. People are ringing me up from all over the world saying, have you got any? Yeah, can you get some? Will you have some? When will you have some? How much? And what, it's like my phone is ringing. And normally, as a salesperson, you have to ring the blooming phone to ring other people up. But, everybody knows. And Europe is now getting on the program. France is gone ballistic on getting its rare earth sorted out. Everybody knows that that's an issue.
European governments are scrambling for rare earth access, while public markets still behave as if supply security is optional. What Clem Chambers is highlighting here is that institutional demand signals are surfacing quietly through procurement panic, not through official economic warnings. France accelerating strategic sourcing while investors chase AI hype tells you insiders already understand the bottleneck risk underneath the technology boom. When physical access becomes the story, financial assets tied to false abundance narratives can reprice brutally and without warning. Next, Clem Chambers reveals why commodity shortages always become visible to governments before they become obvious to retail investors.
But if you look at rare earth and you go, oh, how about chromium? How about cobalt? How about all these other weird? How about iridium? How about yttrium? Well, China's got a stranglehold on pretty much all refinery in the world, full stop. They control the whole basic refinery market in the world. There's some in India, and they're going out of the way to get themselves sorted. Everybody's realized that although China squeezed on the throat of everybody else on rare earth, it's got it all. Not only has it got all the raw materials, it's got all the equipment to refine the raw materials. Yeah. It's got all the chemicals you need to refine and make the equipment. It's got the whole base of the pyramid. And that is really the cause of all this conniptions that you'll see between America and China. Because America woke up and went, hold on a minute, we've outsourced our kidneys and we want them back. And, that's a very fragile position to be in. So they're getting together, hopefully, to be sensible and work together for the prosperity of everybody. Rather than to bash heads, because, bashing heads would be catastrophic.
And obviously Trump's there representing the US dollar too. And I mean, you've pushed back against the death of the dollar argument, saying the dollar has stayed stronger than critics expected. How do you square a strong dollar with a strong gold market?
Well, gold is for war, and we've been heading towards that. And then when the changes with the People's Liberation Army and Xi at the beginning of the year kicked off, which at the very least delayed it by at least 1 year, gold went, stop.
The most dangerous economic dependencies are usually discovered only after political tensions make them impossible to unwind quickly. Clem Chambers' argument suggests America is realizing too late that refining capacity matters more than headline GDP numbers during geopolitical stress. A strong dollar alongside strong gold is not normal optimism. Historically, it signals institutions preparing for instability, while central banks publicly project calm. Investors focused only on stock indexes may completely miss how strategic commodity control is reshaping global power underneath the surface. Next, Clem Chambers unravels why gold reacts to war risk long before conventional markets acknowledge danger.
Yeah, because gold is for war. And if you postpone the war by a year or three, or maybe cancel it, well, obviously, you haven't got so much war coming, have you? Gold is for war because it's not for during war. You spend it during war. So the price of gold may go down during a war, but on the lead up to a conflict, you've got to buy it in. And that's what we've been seeing, countries buying in because they see a conflict coming. Now, Trump in Beijing is the flip side of Nixon in China. Now, Nixon came in and said, let's be friends and you can rise. And now Trump is, 2 generations later, has gone back to say, hey, yeah, we should be friends, but stop taking the mickey. Stop, stealing our IP. Stop flooding our streets with drugs. Cooperate with us properly. Play nice. That's what I think he's trying to say. Now, whether they want to play nice, whether they will play nice, we'll find that out with what happens with gold over the next 3 months maybe, but there'll be a trend. It'll just go on a trend. And if that trend is gently down, that's gently good news. If it goes sideways, nothing was achieved. And if it goes up, well, that's not good, is it?
Yeah. It's interesting. I mean, watching it today with all these headlines, it's flat, but silver's down more than 3% this morning after that huge run. You've called silver FOMO gold, but is that FOMO washing out, or is silver kind of still confirming the hard asset story here?
If gold keeps rising while governments insist tensions are easing, your portfolio may be pricing reality more honestly than policymakers are. This is where Clem Chambers' thesis shifts from simple commodity analysis into geopolitical insurance against systemic instability. Central banks have been accumulating gold at historic rates, while public narratives still push confidence in debt-heavy financial systems and permanent globalization. Silver volatility may shake out speculators temporarily, but sovereign gold buying suggests institutions remain deeply concerned about long-term conflict risk beneath the surface. Next, Clem Chambers reveals why central bank gold accumulation contradicts the market's confidence in lasting geopolitical stability.
Well, what happens with commodity verticals is that there's always another bite of the cherry. In fact, there's several bites of the cherry. Yeah, they make the amazing top and then they fall off and everybody's sad, and then they kind of come back and then everyone's going, yeah, it's going to do it again, and it doesn't. And then it falls heavily, and then 2 years later it does it again, but not quite as much as before. So there are shocks and aftershocks in commodities when you get a boom bubble bust. And to me, this just looks like a silver aftershock. But I don't have a horse in that race. I had it when it was $28, and then I left at between 90 and 107. And, that was great. I love silver. It's been very kind to me. But, it's like an old girlfriend. It's no longer calling.
Yeah. It's a good trade too, Clem. Okay, let's pivot over here a little bit to trade, because Treasury Secretary Scott Bessent said in Beijing just today that the U.S. and China are discussing what they're calling a board of investment mechanism to kind of fast track some deals and lower tariffs on non-critical goods. Does this look like the new U.S.-China model? Keep basic kind of trade alive to control inflation, but wall off AI, chips, defense, and strategic technology?
Well, Trump's always been criticized for being transactional. Yeah. And China is very transactional. And, that's the whole point about trade. Everybody can be friends.
Silver just dropped hard while governments quietly discussed trade corridors designed to protect strategic industries from full economic decoupling. As Clem Chambers points out here, commodity booms rarely die in one clean move because institutional money exits in waves while retail keeps chasing the last rally. The bigger story is not silver volatility. It is Washington and Beijing trying to firewall critical technologies while pretending globalization still functions normally. Investors overweight paper assets could be underestimating how fragile modern trade systems already are beneath the surface. Next, Clem Chambers exposes why controlled decoupling may be impossible without triggering another inflation shock.
It doesn't matter if you make a bit of money or lose a bit of money, or you overcharge a bit or you undercharge a bit. You're transacting, aren't you? And transacting is just great. Everybody, it's a win-win. It should be in transactional business. It's when one party wants to win and wants you to lose, a bit like we've got in the Middle East right now, that's when things get desperate. So, what China is, if you look at China, very, very sensible in many ways. It just wants to do its thing. It's cracked it. It's got a fantastic economy. It's got it is the workshop of the world. Everybody totally is reliant on it, and it just keeps its nose to the grindstone, basically, and just grinds and grinds and grinds and grows and grows and grows in the same way as a lot of the West has forgotten how to do. Right? So they don't want no trouble. They don't want no trouble. They just want to get on with it. And if they carry on getting on with it like they've been getting on with it for the last 30 years, they will be the dominant world power, which is why America's woken up and gone, oh, hold on a minute. Yeah. We wanted things to go well, but they're going a bit too well for you now. Right? Yeah. So you're seeing a sort of rapprochement trying to be formed here. That's how I would vision it. You don't have to go to Beijing to cause trouble. You go to Beijing to try to do a deal. He's the deal man, for good or for bad, for right or for wrong, whether you love it or hate it.
Markets keep framing US-China tensions as ideological, but the real battle is over who controls industrial survival for the next 50 years. Clem Chambers notes that China's advantage was built through relentless production discipline, while much of the West financialized itself into dependency. Wall Street still treats manufacturing like an outdated sector, even as governments quietly race to rebuild supply chains tied to defense, AI, and energy systems. For long-term investors, this is not political theater. It is a structural reset that could permanently reshape capital flows and inflation. Next, Clem Chambers reveals why industrial dominance matters more than military rhetoric in the next economic cycle.
He's missed a deal. Well, the Chinese are famous for being dealers, wheelers and dealers. And China's been very good at that. And has been very clever and very strategic, just like the West hasn't. The West has been tactical, short-termist, trying to just, do its short-term political stuff. China's been strategic and has been grinding along very, very successfully. Well, now the superpower is getting together with the new superpower and saying, hey, let's sort this out. Let's do some deals. Let's be sensible. Let's muddle along, which is great if that could be pulled off. Could sensible behavior break out in this world? I hope so, because if it doesn't soon, there's going to be problems.
Yeah. And I mean, to further that point, I mean, you said that the country that is kind of the workshop of the world tends to become the dominant power. I mean, Britain had it, America had it, now China has a huge share of it. Can America really win the AI race if it cannot rebuild the physical industrial base behind it?
Okay, this is an important idea that I've been working on for some time. It's wrong to say that you did, which is versus thinking, okay? It's all about, can you win? And then can someone lose? That is a negative predatory way of looking at it. It should be cooperative. Can America grow and be prosperous and do amazing things working with other people? The answer is absolutely yes. Can it beat China? Can it get into a competition and overwhelm it like some WWF competition? That's the totally wrong way of thinking about it.
The AI boom narrative breaks down fast once you realize advanced technology still depends on physical factories, minerals, and refining capacity. What Clem Chambers is highlighting here is that America cannot dominate the next industrial era through software alone while outsourcing the physical backbone required to sustain it. Governments publicly celebrate innovation, yet privately scramble to secure ports, chips, energy grids, and commodity access because they know digital wealth depends on real-world infrastructure. Investors chasing AI valuations without understanding supply chain geopolitics may be walking into the same blindness that preceded previous market bubbles. Next, Clem Chambers unravels why the post-industrial economy narrative was always economically unsustainable.
That's really a catastrophic way of framing things. Yeah, so I think that you shouldn't think of it as versus. If it's going to be versus, it's going to be catastrophe. If it's collaborative, cooperative, wow, it could be amazing, right? We're about to put blooming server centers in space. Yeah, Musk is putting those crazy equipment in orbit. You know, we're getting quantum computing. They'll be, you know, fixing all the diseases with DNA. They'll be plugging computers into people's brains. The AI is going, you know, amazingly well. That's all those things to look forward to, right?
Yeah.
So why do we have to be versus? Why do we have to win? Why can't everybody win? So that's my model. And with a bit of luck, you know, people in China won't be thinking us against them. And America won't be thinking us against them. They'll be thinking, what benefit can we get from them? And what benefit can they get from us? You know, that's transactional. That is what Trump is meant to be about. Transactional, right? Do a deal. Well, I hope he is the master of the deal, because this is one deal that needs to be done.
Yeah. Yeah, but isn't there still a hard limit to cooperation? I mean, if rare earths, chips, AI, and Taiwan all sit inside the same strategic relationship, where does cooperation end and national security begin?
Well, there's only one kind of national security, and that's not to be on the warpath.
Yeah.
So the first thing that you know, some countries need to do is get off the warpath.
Every major market bubble convinces investors that technological progress automatically eliminates geopolitical risk, right before reality interrupts that fantasy. Clem Chambers' argument suggests the real economic opportunity ahead depends less on competition and more on avoiding catastrophic escalation between nuclear powers tied together through trade. The contradiction is glaring. Governments publicly discuss cooperation while simultaneously reshoring strategic industries and tightening technology controls behind the scenes. For savers protecting wealth over decades, stability matters more than headline stock gains fueled by temporary optimism. Next, Clem Chambers reveals the hidden national security contradiction sitting underneath the global AI expansion story.
There is no security these days, not if you're on the warpath. Everybody dies. That's why we haven't had a war since 1945, because nobody dares have one. So, and you know, it needs to stay that way. Yeah, I mean, it's the fact that it seems that we're so far away from World War II that people can't remember just how diabolical that sort of stuff is. That is one of the problems we have. Yeah. So, you know, war, nobody, I don't think now can even, you know, benchmark the cost of any sort of conflict like, you know, they've been, you know, sidling up for. So that is the ultimate thing that has to be avoided. National security is about having a strong economy and having strong governance, which America has strong governance, although it's hard to believe, has strong governance and has an advantage in that area. And, you know, China has strong strategy, has its advantages too. But rather than use those advantages to arm wrestle, yeah, you should be able to use those advantages to elevate everybody. And that's the choice that world leaders have to make now. Is, are they going to elevate or are they going to escalate? And if they escalate, it's all over. Yeah. And if they elevate, the future could be brilliant, right? And the markets are dwarfed by the prospect of those two outcomes.
The last time global leaders believed escalation could stay controlled, markets spent years pricing prosperity right before systemic destruction arrived. This is where Clem Chambers' thesis shifts from market commentary into a warning about historical amnesia driving modern policy mistakes. Central banks continue accumulating gold while publicly projecting confidence because they understand geopolitical fragmentation threatens currencies, debt markets, and social stability simultaneously. Most investors still assume diversification alone protects wealth, yet real crises tend to expose how correlated financial systems become under stress.